What are CEOs in your district telling you about what they see in the business climate, and what are they asking you to do?
So the biggest issue for businesses today, and I think this is the vulnerability for the U.S. economy, it's not the consumer's in good shape, it's for businesses. There's a high level of uncertainty, and businesses are using logistics and supply chain arrangements heavily to remain competitive. They don't have much pricing power. Technology and globalization have limited their pricing power, so they're using some of these other techniques to manage their costs, and what they're seeing is a lot of uncertainty as to how they're going to be able to do that. And I think these recent threats against Mexico have further put more uncertainty into their minds. So what do businesses do? What they're telling me they're doing is be more careful, hold off on CapEx, be more cautious. So I think this is having some chilling effect. I think the businesses will also remark cost of capital is historically low, access to capital is historically high, and so they're not that sensitive for many of the businesses I talk to, other than say the home builders. They're not as sensitive to the policy setting as they are all these other uncertainties in managing their business.
You mentioned the Mexico tariffs. No district would be more vulnerable than the 11th district, yours. What would be, have you modeled what the impact would be on your district and then on the national economy? Yeah,
so we're, by our estimate, we're probably a third of U.S. trade with Mexico. Texas is the largest exporting state in the United States. We've taken a number of looks at it. I don't even want to throw out statistics because I'm still hopeful that there won't actually be a follow-through on these tariffs. And the reason I'm hopeful is this is a very different trade relationship than the one with China. This is substantially an intermediate goods relationships which allow U.S. companies to manage their logistics and supply chains, be competitive, domicile in the United States, and it's allowed North America and the U.S. to take share from Asia. So as opposed to the trade relationship with China, which is primarily a final goods deficit, and so it is so overwhelmingly in the interest of the U.S. to have a strong trading relationship in North America with Mexico and to some extent Canada, that I don't want to go too far expecting that we're going to do something that was going to further jeopardize that relationship. It's so clearly in our interest to have a strong trading relationship with Mexico.
Well, we have seen the impact, just as you say, in uncertainty.
Yeah.
How do you think the Mexicans would react? You speak to their policymakers a lot.
You know, we're very close to senior officials there ahead of the central bank. So it's not been as reported as much in the press, but over the last 2 years, Mexico is the one country in the world that's fighting an inflation problem. They've had a very volatile currency. They've raised their domestic interest rate substantially over the last couple of years. I think there was hope that there would be some stability with USMCA. This just further puts volatility in their currency, makes it harder to manage their economy, and we see slowing in economic growth in Mexico. They're actually slipping. They've got a new president. There's uncertainty with that. So it's a very challenging time in Mexico.